as well. Okay, so yeah, recording in progress. Okay, so we have obviously a tax efficient regime, robust governing legislations, and the other thing that's very important to remember is that there is no arbitrage between Malaysian onshore AMLA and CFT rules as and Labuan. Okay, so we adhere to, and I'll go through that in the next slide. There are certain supranational legislations that apply to Labuan as it applies to onshore Malaysia. Yeah. Okay, so I want to talk a little bit about the regulator. This is the other thing that, sometimes, and I'll be very candid, and those of you who know me know that I am extremely candid. We are not a subsidiary of Bank Negara. Okay, number one. Neither are we, and we rank pari passu with all the other regulators. So this is actually an extract from the Ministry of Finance website. As you can see, we are a statutory body. So Labuan Financial Services that regulates the Labuan International Business and Financial Center is a statutory body set up by MOF, and it ranks pari passu with all the other regulators onshore in Malaysia. Yeah. So as you can see there, we're on the same row as revenue, or IRB as it's called, the PDIM, you have Bursa, you have Negara, you have SEC, and all the rest of it. So, we rank pari passu with the rest, and we are a statutory body under the MOF. Yes, I think sometimes there is a little bit of confusion with regards to where we stand specifically with the Central Bank of Malaysia, with Negara, because there seems to be talent moving between the two. So, our new Director General, Encik Nick Din, was with the Central Bank, and for the longest time, the Central Bank Governor was our chairman at Labuan FSA as well. So yeah, but we are a separate statutory body under the Ministry of Finance. So this is the other thing that a lot of people ask us about. So what is mid-shore? So what does this mean, right? So, and because you'll get the slides, I won't talk to it, but what I'd like to just highlight to you is this. A lot of typical offshore centers are island nations where their GDP, their main economic drivers is financial intermediation or offshoring, right? The beauty about Labuan is that is not our main revenue earner, as it were. So, a lot of people ask, why would Malaysia set up a Labuan in the first place, right? And I said, and I alluded to that in the beginning in the first slide, which is to help Malaysian entities leave Malaysia as part of the huge regionalization push 20 plus years ago, okay? And the beauty about Labuan is that as there has been more and more regulations, scrutiny, vis-a-vis generic offshore centers, Labuan has come up with something quite unique, because we have never ever been an offshore center. I mean, you can imagine that because we are part of the Ministry of Finance, we are assessed by all the supranational and the multinational regulators as multilateral regulators as part of Malaysia. So Labuan can never be and will never be the Achilles heel of Malaysia when it comes to these assessors, right? I think some of you would have noticed that Malaysia as a whole was recently grey listed for our foreign exchange zero exemption on tax. And that is an assessment of Malaysia as a whole, including Labuan. So what you have with Labuan is a facilitative regime that is forever finding a balance in order to ensure that we are well regulated and yet facilitates wholesale financial intermediation. Okay, now, and I'll go back to that word wholesale quite a few times later as we talk about the exact fund structures that we're looking at, right? And how you're housing them and who you can speak to, and in order to get your clientele involved and stuff like that. So if you look at Labuan and you forget the idea of us being any kind of center or not center, if you look at us like a platform for wholesale financial intermediation, right? I think that's the way to understand it in the best possible context, right? And the fact that we are part of Malaysia will ensure that we will always, always, always adhere to the best standards and the same standards as Malaysia. Hence, mature. So this is the suite of legislations that govern. So if you look at Labuan, and this is something that, Labuan 101, right? So Labuan as an island, as part of Malaysia, has the onshore financial system sitting on the island and being offered on the island, and the international financial system being offered on the island. So everything that's offered, for example, a very famous Malaysian bank, would probably have the onshore version of it on Labuan and the international version of it in Labuan. One regulated by the Central Bank of Malaysia, one regulated by Labuan Financial Services Authority, both doing very separate businesses, right? And the businesses that are run by Labuan, in Labuan IBFC and regulated by Labuan FSA comes about from the passing of these acts that are passed by the Malaysian Parliament. Okay, so as you can see, what you have there, 6 acts that are regulated by Labuan FSA, and another 3 that are regulated by the Inland Revenue Board. So to go back to that mid-shore balance, right? Don't forget, mid-shore balance. To go back to that mid-shore balance, remember that there are 2 competent authorities that govern Labuan in a way. The Labuan FSA and the IRB. So IRB Malaysia governs all the taxation issues in Labuan, as it governs all taxation issues in the rest of Malaysia. Again, another point to note vis-a-vis check and balance. Okay. Now, acts of, and then you have Labuan FSA. And Labuan FSA really is an amalgamation of what you'd have onshore, i.e., the central bank, the SEC, the SSM, which is the CCM, the Companies House in Malaysia, all sitting within Labuan FSA. Okay, so it's a one-stop regulator, and the only other regulator in Labuan will be the IRB vis-a-vis everything tax. Now, there are acts of general applications. So these are the AMLA Acts, the Mutual Assistance on Criminal Matters, the MACC Act, the National Anti-Financial Crime Center, and the certain foreign exchange notices. Now, these are universal vis-a-vis Malaysia holistically as a jurisdiction, and hence it also applies to Labuan. Okay, so as you can see, there are a lot of acts passed by the Malaysian Parliament that actually govern all activities that happen in Labuan. So what do these acts do? These acts create a complete ecosystem of solutions, right? So you have everything from IBCs, which are international business companies, to banking, to capital market offerings. You have insurance, leasing. We have a very strong digital market now. We have wealth management, which includes funds, obviously. But you know, it's the unique selling proposition with regards to funds is a little bit less articulated than in the private wealth space, where we have Sharia compliant trust, purpose trust, special trust, and private foundations, as well as probably the world's only Wakaf foundation. Okay. So the acts passed by Malaysian Parliament, regulated by Labuan FSA and the IRB, create this ecosystem of solutions that create the jurisdiction. Okay, and we are home now to 850 license holders. 850 license holders that come from all over the world. Okay, all over the world. So these are the fiscal. I mean, it would be amiss to talk about Labuan and not talk about the fiscal structures and the corporate entity benefits, right? So income from trading activities are taxed at 3%. Non-trading income attracts no tax. There is obviously, as we have all adhered to BEPS 1.0, which was a standard issued by the OECD. So BEPS is the Base Erosion Profit Shifting Initiative, which is now morphing into 2.0. That is going to be quite interesting to see how it rolls out in 2023. But what has happened with that is that it has created an obligation for anyone that would like to enjoy this preferential tax rate to have mind matter management in Labuan. And in Labuan, what the IRB has decided is that they will provide via a gazette order issued by the Malaysian Parliament a list of substance requirements. So it's a very clear exercise to create substance in Labuan as opposed to certain other jurisdictions, because it is prescribed. You have a gazette order passed again by the Malaysian Parliament that details if you have a fund, what's required, if you have a company, what's required in order for you to enjoy this 3% tax scheme, right? Of course, a Labuan entity has the option of not adhering to this 3% or not enjoying this 3% tax scheme, and paying 24% as well, which is the high water CIT, the corporate income tax rate for Malaysia. Other benefits, and yes, there are reasons why some people would rather pay 24% than 3%, because the intricacies of fiscal policies at home in their home country require that. So Japan, for example, is a classic example, right? Other benefits, so you have exemption of withholding tax on dividends, which might interest you, interest, royalties, service fees, exemption on stamp duties, access to 70 double taxation agreements, not so much for funds, but definitely for IBCs, which are international business companies, 100% foreign ownership, and access to live in Malaysia. Yeah, so all these are the benefits generically for Labuan license holders and Labuan entities, or employees in reference to the last bullet point, access to live in Malaysia, i.e. employees of Labuan entities. Yeah. So this is generally a slide because we always get questions about Labuan's a tax haven. No, it's not. And this is why. Okay. No nominal or nominal tax rate. Labuan does have a tax rate. No compliance to international standards. I think I've covered that earlier with regards to that check and balance on that mid-shore. Lack of transparency, no, everything is transparent in Labuan. You know, everything. In fact, sometimes I think we are a little bit more transparent because we do allow for access for information vis-a-vis a list of companies on the regulator's website. No or unwillingness to exchange information. No, because there's a wide treaty and mutual assistance agreement, and we have 23 MOUs with other jurisdictions supervisory bodies. So when people come to us and say we'd like to be licensed in Labuan, there's an entire slew of information that we require from them. And one of the things that we do for a fact is if they are licensed in another jurisdiction where we have an MOU, or sometimes maybe even if we don't, we will ask for a reference from that other jurisdiction with regards to their health and reputation of that license holders. Absence of substance requirements. So basically being able to use a jurisdiction that is a tax haven as a pass-through platform, that's not available in Labuan for sure, because we have prescribed economic substance requirements, right? Vis-a-vis spending and employment. So let's go into the crux of the Labuan fund regime. So what is a private fund? So in Labuan, actually, there's public funds and private funds. We're not going to be talking about the public funds because public funds will require for you to be licensed, for you to be allowed and presumably licensed in the home jurisdiction of the retailers, right? So what we're going to talk about today is private funds. And the private funds are mutual funds, which are not offered to the general public, right? Or necessarily owned or held, and are owned or held by not more than 50 investors, where each investment, first-time investment has a minimum floor. And then where the number of investors or the first-time investment is not less than 500,000, you can have any number of investors that are subscribed into this fund, right? It can be conventional, Sharia, or digital, okay? And these, please be clear, these are private funds. So I think there's also a lot of interest with regards to, oh, if I set up a fund in Labuan, can I sell to a Malaysian retailer? No. The answer is no. It's very clear. That will require SEC approval or Securities Commission in Malaysia, or the approval of any domicile or jurisdictional regulator in the country of domicile of that retailer. However, when it's a corporate entity or a qualified investor, that is when it might be possible. But having said that, that will require you to ensure that you adhere that there's a threshold for each jurisdiction in order for you to make sure that it's a qualified investor that you're dealing with. Okay, so please let's be very clear with regards to that. Business activity of a fund is generally involved either pure equity or non-pure equity. So when it's pure equity, that means you just receive income, right? It's not a trading income, it's a pure equity, it's holding, it's stagnant, it's static. Then the management and control and all that's required in order to enjoy that is 20% per annum in Labuan. So you need to have an operating expenditure of 20,000 ringgit. Now, this is one of the things that actually, in a way, life is interesting, right? So when the substance issue first came out, I think about 4 years ago, everyone was thinking that this is going to be the end of a lot of jurisdictions. But actually for Labuan, what has happened from it is because Malaysia generally and Labuan specifically is so cost efficient. What has happened is that we have seen a tremendous amount of interest in Labuan now because it's so cost efficient to create the substance that's required in order to enjoy the fiscal benefits of Labuan, right? And the other thing which I should say, which maybe I did not earlier, is that Labuan fiscal regime is in perpetuity. So it's not an incentive a la regional incentive that we have in Malaysia, or whether it be linked to geography or whether it be linked to a particular initiative, i.e. the digital economy, where you get a certain preferential tax rate, or it's a principal hub under MIDA that's renewable every 10 years or 5 years, depending. This is, for all intents and purposes, in perpetuity. In order for this to be undone, it would have to be passed by the Malaysian Parliament once again, right? So that's very important to understand. So non-pure equity, well, there is trading. So you'll need one full-time employee and you'll have to incur a minimum annual operating expenditure of 20,000. Now, this 20,000 minimum operating expenditure, and I caveat it by saying that I am not a tax expert or advisor, but I have been informed and I have it on good authority that the operating expenditure will include your fees to the regulator, your fees to the company secretary, in owning the business, in running the business, your fees towards your flights, towards going to board meetings and all the rest of it. So, there isn't a category necessarily of what would qualify towards the 20, yeah? So let's look at the common fund, the type of common fund structure. So you've got a Labuan company. This is box standard. So what you have is investors, Labuan fund, investment, fund manager. Okay. So here, what it says here is commonly used for open-ended, closed-ended funds. Shares can be redeemed from profits and capital. Shareholders' liability is limited, right? Depending on the M&A and the shareholders' agreement vis-a-vis the company. And it's a legal structure and governed by the M&A. So the M&A will allow you that flexibility to provide pref shares and all the rest of it, depending on how you want to structure your fund. So this is very bulk standard. This is, it's normal. What I wanted to talk a little bit about is this protected cell company. Now, the protected cell company, I mean, some of you might know it as the variant of it is actually the variant of it that was, and within these four walls was kind of copied from us by Singapore, is the VCC, so the variable capital company. So the VCC in Singapore is really used for family offices and funds, wealth management, and I can talk a little bit about the benefits and advantages of Labuan PCC vis-a-vis the Singapore VCC later, if you would like. But really, it's very similar. So what it is the Labuan Protected Cell Company is a company created by the Labuan Companies Act. So if you go into the Labuan Companies Act, you will see a subsection that creates into being the Labuan Protected Cell Company. And what it is it's an umbrella fund. For all intents and purposes, it's an umbrella fund. So anyone on this call who's interested, who knows funds, would know it as an umbrella fund, right? And with that, you have the ability to form multiple cells, right? And these segregated cells can have different differentiated assets, liabilities per share. You can have different M&As for those shells. And what's beautiful about this is that each cell is actually bankruptcy remote, as provided specifically by legislation under Section 130 of the Labuan Companies Act. So should cell A, in this particular instance, collapse, cell B, for all intents and purposes, is fine. There's no domino effect between the cells, right? This is also being used very extensively at the moment in the self-insurance space, that Labuan is getting a bit of recognition about, with regards to this space, the self-insurance or captive insurance, as we call it. So what happens is that, what they do is they put different lines of risk within each cell. And because each risk, the downside that the risks kind of fall into each other is then mitigated, because each cell will ensure that that risk doesn't flow into the next cell. The same way that if a fund uses the PCC, right, if there is something amiss or something's gone wrong with one of the investments within cell A, for example, in this case, it will not affect the investment of cell B or the health of cell B, excuse me if I may speak. So there are certain cost efficiencies. So remember earlier when we went through this, which is the Labuan company. So each Labuan company will have to have a substance requirement, remember? Now, what's the beauty of the PCC is that the substance requirement only sits at the core, which is the PCC, that little red box that you see, the maroon rougey box that you see there, that is where it's at. And that is 200,000, 2 employees or 200,000 or something like that. I can't remember, it's in the Gazette. It's all very clear, and I can promise you it's not a lot because everything is in Ringgit Malaysia, number one. Number two, each cell is not required to adhere to a specific segregated substance requirement per cell. Okay, it does not require, so it creates a very cost efficient fund structure, right? So this is what I think a lot of there's a lot of interest with regards to funds, but what's interesting to note is that it's not just for funds necessarily, because it is a legal entity, it's a company. You can do anything with it in that sense, right? So you can have funds, you can use it for wealth management. People have used it for family offices as well. Sometimes when you look at the wealth management space, the ultra high net worth wealth management space, not the what I call the mid-market fund space or the very retail insurance wrapper space. So in the very high-end, ultra high net worth private client space, I should say, sometimes what they do with this is that they have a foundation. And the beauty of the Labuan Foundation is that actually breaks beneficial ownership and beneficial interest. So what you have is a foundation owning a PCC, and the PCC acts as that subsequent holding entity, and certain assets or businesses are then injected into different cells, right? So that has happened quite a lot as well. We've seen that happen quite a lot. Okay, I'm happy to talk through the details later during the questions if you have any. But please go and have a look at this, because essentially what it is an umbrella fund with a very clear substance requirement at the core, and the bankruptcy remoteness of each cell is prescribed by legislation. Okay. So this is again another the LLP. So this is setting up a fund via the limited partnership agreement, which happens quite a lot as well in Labuan. So operations and dissolution of LP is governed by the agreement. Again, you have that flexibility of drafting, the same way you had the flexibility of drafting vis-a-vis the Labuan company in the M&A and the articles, right? So general partner manages the operation, and the LP enters into contracts on behalf of and has unlimited liability on behalf of the LP and has unlimited liability. The general partner is normally the fund manager. Limited partners have limited liability and rights on profit. Again, depending on how the agreement is structured. You have obviously different categories of partners, yeah. Contribute and no voting rights, right? Very similar, very similar to the company, as you all know, right? So here is what we want to talk a little bit about. I'm not looking at the chat at the minute, I'm sorry. Fund manager. So we have a fund management license in Labuan, so a fund manager license. So this provides management services alone with investment or with investment advice or admin services. The fund administrator, right? Actually, Labuan is a huge fund admin center because as part of Malaysia, we are extremely cost efficient. So a lot, I know for a fact that a lot of the larger mid-sized company secretaries in Labuan actually do a lot of NAV calculation and fund admin role for funds that are based in Caymans, BVI, all over the place. So it's all centralized and the back office is run out of Labuan. Okay. I know for a fact that, and actually it doesn't have to necessarily be in Labuan. I know that one of our license holders has like about 4,000 square foot in Johor Bahru just doing calculations for funds for clients all over the world via Labuan entity in Johor Bahru because their offices are in Singapore. So then you have your securities license, right? A person for valuable consumer provides investment advice and admin services. So this is the last slide, I believe. Yeah, okay. Why Labuan IBFC? Why Labuan IBFC? So regulated, supervised, AML, CFT, the framework is recognized, it's clear. You know, I think you'll be very hard pressed to find another jurisdiction with that range of structures, right? So you have your partnership, your company, your PCC, your foundation. You have so many different licenses and entities and solutions that you can use in order to structure a fund. I'm quite simple, so I look at funds as simply a cup, right? So there are a lot of vehicles that you can kind of use to kind of aggregate the funds and then from there manage it. Fund setup can be conventional, Sharia compliant, digital. So we're a very digital friendly jurisdiction. All you have to do is what you have to do with digital is, explain to the regulator how this is going to work on a digital platform. Make sure that there's very clear money laundering, eKYC, client onboarding, and all the rest of it to make sure that from a supervisory point of view, the regulator is comforted. We don't have a sandbox. We don't have a digital sandbox in Labuan, right? And obviously, we have a separate act that governs Islamic funds. Now, the Islamic element of Labuan is quite interesting because obviously, everything that you can do in Labuan, you can do Islamically. Okay, so there is an Islamic version. If you go back to the original slides, when you do get the slides, you'll see that the Labuan Financial Services Act also has the Labuan Islamic Financial Services Act. So everything that is allowed and all the structures and solutions that are allowed in Labuan are allowed in an Islamic manner as well through that act. And we have not an advisory, not a Sharia advisory council, but we have a Sharia supervisory council that can come in and declare that this is Sharia compliant, or actually you can go to the SSC, I believe, and request for their input on certain structures as well. So Labuan Fund is non-resident under Malaysian Foreign Exchange Administration. So a little bit more liberal vis-a-vis exchange control environment. And yes, a Labuan Fund can be in any currency, right? So you can have it in rubles if you want. You can have it in any currency you want, right? That is the flexibility of Labuan. And I think, sometimes when you look at a fund and you look at the kind of risk that a fund has to take aside from investment risk, there's always, in this era of uncertainty, there's always the FX risk as well. And sometimes what we've seen is sometimes someone will set up a PCC and then they will aggregate the cells, not necessarily vis-a-vis asset type, right? Or investment horizon. What they'll do is they'll bucket it, right? They'll bucket each cell based on currency. So what they do is then the investment from that fund goes, so there's no foreign exchange downside necessarily, you know, so people bring in, let's say, Vietnamese dong, it goes into a cell in the Vietnamese dong and it gets reinvested in that as well. So sometimes that's what happens, and that's the flexibility of Labuan, and you know, coupled with that flexibility of the PCC. So we have an ecosystem of service providers and that support fund operations, and I mentioned that earlier as well. We've been around for 30 years, and I think we will be around for a bit longer than that. The articulation of what Labuan is evolving, obviously, you know, and anyone who's been in this market long enough will see how we've matured as a jurisdiction, and it's been really fantastic to see how Labuan has grown. And I go back to my original message, how Labuan has grown as a very Malaysian-centric jurisdiction for wholesale intermediation, for Malaysian entities going out to really becoming an intermediation, a wholesale intermediation hub for Asia, you know. And it's very interesting because obviously this it's proof that our proposition is strong, and I would like to think that it keeps growing stronger. So, you know, I'm happy to take some questions now. Escape here, or I don't know. Okay, we can here. So there are some chats here. Okay, so William, do I need a fund manager to set up a Labuan PCC? No, the Labuan PCC is set up by a Labuan company secretary. Okay, because remember, the Labuan PCC is a Labuan corporate entity. So what you need to do is what we call, so this is where it gets a bit, if you look at the list of Labuan, what they call trust companies, they are not trust companies. What they are is company secretaries. Okay, so please let me give you a quick cheat guide here. It's called Labuan trust companies, but really what they are is TCSPs, which are trust and corporate service providers in Labuan. And what you need to do is to go to one of them and say, I would like to set up a PCC. So do I need to be a fund manager? No. As I said earlier, anyone can set up a PCC, right? Anyone can set up a PCC, but generally you would be a fund manager, or you would have some interest in making sure that you need, you know, that what you want to use the PCC for, right? So private investment, instead of using companies, parents, and subsidiaries, yeah, we're not selling the fund to investors, intend to manage our own portfolio. Absolutely. So this is what we were talking about, right? Family offices are using these structures in order to run their own portfolio, in order to ensure. So we've known family offices to set up a PCC, for example, right? And each cell belongs to each child. So the beneficial, the second generation has a cell each, right? For them to go away and do what they want with. And then they get, and what's beautiful is that if somebody, if one child doesn't do so well in a particular investment, it doesn't affect the whole asset, as it were. So yeah. Which COSEC is recommended? William, we are not, you know, very much like our friends in Capital Markets Square, we are not allowed to recommend any. However, there is an extensive list. There are 63 company secretaries in Labuan at the moment. It's grown. I mean, when I first started working in Labuan, it were like maybe 20 odd. Now we have 63. Some are large, some are very small, some are extremely niche. So what I would recommend you do is write a standard email, go to our website, download their contact details, and write to them and see who writes back, okay? And take it from there. We are not allowed to recommend. I'm sorry. In terms of fund partnership or fulfilling the ESR, should we hire local employees under the fund or under DGP of the fund? Since the fund is just capital pool, it doesn't seem to make sense to hire people under it. Yeah, but I understand that concern, but this is towards, as I said earlier, towards enjoying that 3% tax rate. This is just to ensure that it's not a pass-through vehicle, right? To ensure that there's substance in Labuan. So you need to ensure that you fulfill your economic substance requirements, which are your ESR. Should we hire local employees under the fund? Yes. You know, the beauty is that there is no prescribed level of seniority with regards to who you can hire or who you should hire, right? So this you will have to hire local employees. If you are talking about hiring non-Malaysians, that is also possible. Obviously, you can hire non-Malaysians. They will then get a visa to live and work in Labuan or any place in Malaysia, but they will need to reside in Labuan in order to fulfill the ESR requirements. Are there any other questions?
I think there's one more in the chat box, Farah.
Okay, sorry, I need to get to the chat box.
Are there any restrictions for the funds to invest on the KLSE?
No, because the fund is mandated to do whatever the fund wants to do. So investing into KLSE, investing into the Malay or Bursa, I should say. Investing into Bursa would be what what is mandated by the fund, right? There will be issues with regards to withholding taxes, because we have to make sure that there's no arbitrage between onshore Malaysia and offshore. So you need some tax advice as to make sure that it is worthwhile in the end, right? As a Malaysian or non-Malaysian. No, it makes no difference whether it's Malaysian or non-Malaysian. But I go back to the original statement, yeah, which is Malaysian retailers are not allowed to subscribe to a Labuan fund. It has to, you know, and this would be, I believe, under the SEC rules, the Malaysian SEC rules, to say that qualified investors, corporates are allowed, right? Corporates are allowed and qualified investors are allowed. So in principle, there are no restrictions, but I will look at it from a taxation point of view to ensure that it is worthwhile doing it that way. Yeah.
Does anyone else have any questions? You can just unmute yourself and ask as well, or type it in the chat box.
Happy to have a chat. No?
Okay, so
Yeah, hi. Can you hear me?
yes.
Hi, Forrest. Yeah.
Hey, how are you doing? So I just want to ask a general question. There was something that was announced in the budget with respect to the transmission or remittance of capital, and I was wondering whether there's any tax implications arising from that announcement with structures that were created or existed prior to that announcement, or what are the implications of that?
So which bit of the budget specifically, can I ask? This is the
Yeah, there was
income, or?
yeah, we've set up a PCC as you might know, and we were getting a few questions, and maybe I'll just give a bit of implications and all that, because I may not know exactly the details of why the questions are being asked. So one in particular was more of prospective LPs into our fund asking the question whether the so-called tax on remittances of monies that they may hold offshore would be taxed. So something along those lines. I'm not sure whether you're familiar per se, but you may have been asked this question. If you have, then it'd be great to understand that a bit more. You know, because we're trying to find out what.
So I'm trying to understand. I'm trying to understand
Yeah.
the reference here. Remittances. I mean, are you talking about the foreign source income taxation onshore? Whether it applies to Labuan? At the moment, it doesn't.
It doesn't apply to Labuan. Okay.
At the moment, I caveat
Right.
that. At the moment.
Mm-hmm.
So that's why there are a lot of entities that are looking at a Labuan and, you know, setting up a Labuan entity to then hold foreign source income, because there's no tax.
Okay.
Because you have to understand that Malaysia is one country, two tax systems, right? You have the Labuan tax system and you have the onshore Malaysian tax system. Now, historically, before this latest change, because of the grey listing by EU, and this is something that I mentioned earlier, the grey listing by EU looked at it and said, well, you know, you're not taxing foreign source income. And that's not right, okay? Because you should be taxing. And actually, this is something that's perennial. It's been around forever. It's part of the great, colonial British system of not taxing. Singapore doesn't tax either, and neither does Hong Kong. So Singapore introduced some provisions that allowed it not to be grey listed. Hong Kong did not, and Malaysia did not. And because of that, Malaysia and Hong Kong were both grey listed by the EU. In response to that, we have now introduced taxation on foreign source income. Okay. Now, the taxation on foreign source income is vis-a-vis the ITA, which is the Income Tax Act of Malaysia. It does not apply to Labuan as yet. However, as you can imagine, in order to reduce arbitrage, I would not be surprised that will start also to permeate into Labuan. Okay, so I'm not saying that it will happen. I'm saying that in order to reduce arbitrage. So I think one of the things that's very clear is that, as one country, two systems, i.e. Malaysia onshore and Malaysia Labuan, we have to ensure that there is no arbitrage between the two regimes. In order to ensure there's no arbitrage between the two regimes, my hunch would be that there will be some kind of a taxation on foreign source income in Labuan eventually. Right? So yeah, so that is the situation with regards to foreign source income. What I would recommend you to do is, actually everyone on this call might benefit from going onto our website and I don't know, Wyman's sitting next to me now. Wyman, what she'll do now is she'll put it in the chat box. So there's a link to a webinar, because we do about 500 of these. It feels like it, but we don't. A webinar that we hosted with Tricor, which is one of the largest Asian company secretary. And that was a webinar on generic Labuan for public listed companies. So that was supported by Bursa, FPLC, and all the rest of it. And we did it with Tricor. Now, there was an extensive conversation with regards to foreign source income on that. And because on that panel, what we did was we had Dr. Verinder, who is the executive chairman of Tricor, but he is like the foremost #1 authority vis-a-vis tax in Malaysia. So we talked extensively about that, actually. So Wyman is going to add that link to the chat box now, and please go and have a look at it.
Okay. Thank you.
Sure. Does income from lobster entity? Yeah. Again, this is the foreign source income issue.
Okay, so final round. Does anyone have any other questions for Farah? Otherwise, I will say thank you very much, Farah, for that excellent presentation and for answering everyone's questions. So we will send, oh, there is a question here. Can you comment regarding the latest PUA 423/2021, inclusion of other trading entities under LBATA 1990?
I bet you guys didn't think it was going to be so technical, right? Labuan is extremely technical. Yeah, so this is the latest Gazette order. And this latest Gazette order, okay, Wyman, we have it on the website, right? Can you extract it? Wyman will put it into the chat box as well. This Gazette order passed by the Malaysian Parliament actually prescribes the substance requirements for all Labuan licensed entities, okay? Now, what is different from the earlier Gazette order is that these are other trading entities that were not included in the earlier Gazette order. Now, it's been very clear to say these are your, if this is your operations, if this is the area that you're operating in, this is going to be your substance requirements. So a comment would be that, yes, it's fantastic because it creates further clarity with regards to the operations of a box standard IBC, right, in Labuan. So it becomes a very clear exercise, i.e., I want to offer, I want to do a certain kind of business. It falls within this category. I go away, set up a Labuan company. This is the requirement that I need to fulfill, i.e., I need to hire a certain number of people. I need to spend a certain amount, and then I can enjoy this preferential tax rate. So it adds, what has added is that it's added a lot of clarity, and it's something that I know my colleagues in Labuan FSA, together in cooperation with the revenue, has worked very hard in order to achieve this further clarity with regards to all the entities operating in Labuan. Because if you know, there is a section there that was not there before that actually lists all the activities that you can do and the substance requirements for that. So it's been actually very good for Labuan that we've come up with this, that the MOF and the Treasury have come up with this new Gazette order, because it will just add to further clarity, because historically this was not included. Some of these things were not included. So yeah, so Waiman's just added that link as well, and that will bring you to the Gazette order.
Okay, great. All right, I think we will wrap up here. Salma has, I think it's a comment from Salma, it's not a question.
Okay.
But
Sorry, I can't see it.
okay, thanks Farah for sharing interesting developments in Labuan IBFC, and look forward to discussing how onshore can leverage on the offshore.
Oh yeah, oh yes, hi Salma, nice to see you again. Yeah, yes, definitely. I think we definitely should. And I look forward to the MOU being signed between us as well.
Fantastic. On that note, thank you so much, Farah, for joining us today. Thanks everyone for tuning in as well. And I hope that you found this insightful and useful. We will send the slides across to everyone by the end of today. Thanks.
Yeah. And if anyone has any queries, just send us an email. We'll come back to you with regards to, as far as we can explain it away, we will. But you'll need your tax advisors and your company secretaries to assist definitely as well. Thank you. Thank you very much.
All right.
Okay, thank you.
Thank you.
Bye.